Hello everyone, hope you're doing okay. Ras Capital here today with a trading educational video. Today we're covering stage analysis. So what is stage analysis? Stage analysis basically tells us the underlying behavior of an asset, any asset. But our approach is specific to stocks. So I pulled up this chart. You can find it in Sam Weinstein's Profiting in a Bull and Bear Market. It's a book from 1987, but it is still very good and the concepts still apply to today. So I suggest you check that out. That's on the recommended reading list. So stocks exhibit, and all assets generally exhibit, 4 stages. The first stage is the consolidation phase, which basically does nothing, goes sideways. And you have a moving average, generally the 150-day, 200-day moving average, the longer-term moving average, flat, going nowhere. And then after that phase, you got a big catalyst, something happens, earnings increase, new management, you name it, and the stock starts turning up. And the 200-day moving average, which is the one we like to use, the longer-term moving average, starts sloping up, and the stock starts making a series of higher high and higher lows. This is the stage you want to be in when buying stocks. A strong stage 2 accumulation uptrend. After that, you have basically the same characteristics as stage 1. The stock goes nowhere, sideways, the 200 moving average flattens out. What generally happens here is the distribution of the stock from strong hands, smart money, to weaker hands because the trade got too crowded. So the upside is limited and the smart money is piling out of the underlying asset. And finally, once this stage capitulates, we have stage 4, capitulation phase, which is the complete opposite of stage 2. This is where you want to be shorting your stocks. A declining 200-day moving average and a series of lower highs and lower lows. And then the process repeats itself, generally speaking, stage 1, transition from stage 2, and so on. So today I want to show 4 live examples of each stage. The first name on the list is Dropbox. If we zoom out a bit here on the daily chart, we can see the stock IPO'd around April 2018 and it initiated a stage 4 downtrend. You can clearly see this with the yellow line is downsloping. This is stage 4. And then it starts some sideways spacing action, moving back and forth between the 200 moving average. What's curious about the stock is this stock looks primed from a stage 1, which is this sideways action. Let me put a rectangle around it so you can more easily see it. It's been sideways all around this rectangular red action. And now we see something interesting. The 200-day moving average starts flattening it out and it's starting to trend upward. So this is a possible stock in a strong sector space in software that could potentially be going from a stage 1 consolidation phase to a stage 2 accumulation phase. The next name on the list is Shopify. Shopify has been in a very clear accumulation phase. If we look at the weekly, it's been a monster of an uptrend since IPOing June 2015. And this is the type of stocks you want to be in. Good volume ups on the upside, higher highs, higher lows. This is textbook stage 2. On a stage 3 example, we have eHealth, an insurer. Look how this had a tremendous stage 2 run with an upsloping 200-day moving average, and it's starting to flatten out. Volatility is increasing. This has the potential to become stage 4. When a stock exhibits stage 1 or stage 3 behavior, you do not want to be in it because it will go nowhere for a period of time until a positive or negative catalyst presents itself. And finally, for the stage 4 example, HSBC. HSBC has been in a clear stage 4 downtrend. Look at the 200-day moving average declining. That is also textbook. This is a type of stocks that you want to be shorting. So what happens during stage 4? There's an anticipation or something that's already happening is a deteriorating earnings landscape, sector deterioration. But there's a negative story, and the long trade holders are piling out of the name. So we've discussed numerous times and in all our analysis, stage analysis, because it is a key component of successful stock identification. We recommend in the reading list Mark Minervini's book Trade Like a Stock Market Wizard and Stan Weinstein's Profiting in Bull and Bear Markets as the best examples of stage analysis, which is a key component for better trading. I hope this was helpful. If you have any questions, please feel free to comment on the comment section below, and have a great day, everybody.